Well, the S&P is falling deeper into correction. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all lower today, with the S&P 500 in its first correction in nearly 2 years. Now, this drop comes as tensions continue to simmer between Russia and Ukraine. Ukrainian officials confirming today that cyber attacks are disrupting both government websites and banks in the country. Those attacks targeted Ukraine's parliament, cabinet, and foreign ministry. Now, NATO has blamed these types of attacks on Russia's GRU military intelligence agency, and Russia-linked stocks in the U.S. are continuing to plunge. The VanEck Russia ETF is down more than 7% today and has fallen more than 20% in the past 5 sessions. Now, meantime, U.S. consumers are bracing for higher gas prices as this conflict continues to unfold. President Biden acknowledged Tuesday that U.S. gas prices will likely rise after he announced sanctions against Russia. But he said his administration will use, quote, every tool at their disposal to limit the impact. Now, according to Gas Buddy today, the national average for regular gas is $3.54, which is the highest in 8 years. But that is expected to get worse as oil prices rise. U.S. crude futures are up again today, hovering just above $93 per barrel. Analysts, though, say if prices top $100 per barrel, gas prices in the U.S. could surge to $3.75 a gallon, and that would be the highest price since 2013. And while Americans struggle with high gas prices, high home prices and mortgage rates are still weighing on home buyers and consumers as a whole. Mortgage application volume tumbled this week as rates continue to rise. The Mortgage Bankers Association says total applications dropped 13.1% this week to the lowest level since December of 2019. Now, refinance applications tumbled 15% weekly and were down 56% compared to a year ago. Purchase applications, meantime, fell 10% weekly and 6% annually. The average 30-year rate rose to 4.06% from 4.05%. Remember, though, this is the first time that rates have been above 4% since before the pandemic. And some retailers, though, are benefiting from these high home values. Lowe's shares are up after beating Q4 expectations. The home improvement retailer reported earnings of $1.78 per share on $21.34 billion in revenue. That beat analyst forecast on both the top and bottom line. The CEO said higher home prices have given consumers more confidence to invest in their homes. Lowe's also hiked its full-year forecast following that earnings beat. Meantime, Teladoc shares are down more than 3% today after reporting a smaller than expected Q4 loss. The telemedicine company reported a per-share loss of 7 cents on over $554 million in revenue. And although that loss was better than analysts had forecast, revenue still fell short. Teladoc is the third largest holding in Cathie Wood's ARK Innovation ETF. Shares of the fund are down about 2.5% today. And Tesla CEO Elon Musk is taking more shots at the SEC. In an email to CNBC, Musk praised the DOJ's investigation of short sellers. He said, quote, "This is something the SEC should have done, but curiously did not." The DOJ is reportedly investigating 2 individual investors who previously shorted Tesla stock, but the SEC is focused on Musk and Tesla. Musk also took aim directly at big hedge funds, accusing them of taking advantage of small investors. So which side are you on? Do you agree with Musk and the DOJ's decision to investigate short selling? And do you think the SEC should put a greater focus on this issue? Sound off in the comments, and I'll see you all back here for the Wall Report tomorrow and the notifications bell before you